It's time for business news now with Nona Peltier. Nona, a lot of attention on business today because of the ongoing effects of the coronavirus, and we heard from Grant Robertson earlier in the program. So Air New Zealand was the big, well, I suppose, announcement today.
It sure was, and it did lead the market down. Certainly, the rest of the market followed suit. So we ended the day with Air New Zealand's share price down, I guess about 4.5% or 5%. Let me just see here, because we've got a lot of numbers today. 5.5% down. So that's a significant drop, but it's not the only drop we saw today on the market. A lot of tourism and related stocks really took a hit. We had Auckland Airport down. They were down 4% nearly. Tourism Holdings, which is the camper van company, 4.25%. Sky City, which is a lot, dependent on High Rollers business and tourism, 4%. But it wasn't just them. It was companies that are associated with China. So, for example, A2 Milk, which is the biggest, one of the biggest companies on our market, it was down 4.5% as well. So that really did drag the market down, as well as, say, a company called QEX, which is a pretty small one, but they ship milk products to China. And of course, there's concern about the supply chain there. Port of Tauranga also down 2.7%. So overall, a pretty rough day on the market. That dragged the whole thing down 1.8%. That was 216 points down to 11,857. That's the worst day in 4 months. But it's, we're not alone here. I mean, the Australian market was down more than a 2.25%. Asian markets looking sick. European trade also looking poor for the futures markets, and of course Wall Street all down. So yeah, pretty rough day on the market for sure.
Yeah, because we're expecting Air New Zealand's half-year result is Thursday, isn't it?
Yes, it is on Thursday.
Yeah, and so their profit, downgrading their profit outlook was
up to 75 million. It's quite a big number, considering this is just as a result of, it's going to be, I guess there's a plus and minus there. On the minus side, fewer passengers traveling. On the plus side, savings in fuel costs, which probably, goes a little way to helping, but not much.
Pretty grim upside. So you've also got, you say, a lot of figures today. So we've got some last quarter retail figures.
Yeah, now those numbers were probably a little touch softer than the market was expecting. But never mind, it was in the positive category.
What period are we talking about?
I'm talking about the fourth quarter. So that's the last 3 months. That's Christmas season. Now, so the numbers were basically, I know I'm sorry for all these numbers today, but look, we had the volume of retail sales rose 0.7%, and that compared with 1.7% the quarter before. That would be the September quarter. Now, prices rose 1.1%, but most of this was in the electronic goods, so durable goods did well. What didn't do well is department stores and supermarkets. So supermarkets primarily because of lower prices for fresh food and vegetables, so that was a bit of a drag. Department stores had the largest fall, though, at 3.8%, and certainly that's been reflected in the share price of the warehouse. Now, it's interesting, the share price of the warehouse is down 7.5% today. That's a really big drop down. Could be just related to the retail sales numbers. Might also be supply chain, because there's been some issues, not just with exports to China, but imports too. So it could be that they're having some issues there. Don't know yet. We won't know that result until next month. So we'll have to see what happens there. It could be just a reaction that's been caught up in the overall downward market conditions.
Okay, so worst day in 4 months, you were saying.
Yeah.
Where do we settle with the dollar?
Well, the dollar is steady. So 63.2 US cents, 95.7 Australian, and 48.9 British pence.
Wow, a very busy day in business news. That was Nona Peltier giving us the rundown on the numbers there.